Welcome back to Fast Market here on the Schwab Network. It's time for cash tags. For that, let's bring in our next guest. It's going to be Megan Brantley, VP of Research at Likefolio. Welcome back to the show, Megan.
Thanks for having me, guys.
All right, so Dick's Sporting Goods. I think everybody's pretty happy if you're an investor in this stock, up nearly 60%. So it's had a great run over the last 12 months here, Megan. Do you guys have the data to back up the positivity we're seeing in this stock?
Yeah, so, last quarter, Dick's had a really nice quarter. Not only were consumers making more trips to the retailer, but they were spending more while they were there. So this kind of bucks a trend at large that we see for a lot of retail names. And I think this overperformance or this outperformance is what's really driving Dick's Sporting Goods stock higher over the last year. Whenever we look at specifically what consumers are talking about, what they're excited about, why are they going to shop there, we see a lot of strength in footwear. A lot of consumers are talking about going to buy a new pair of Hokas or buy a new pair of On Cloud. And we see that Dick's has a perceived high assortment of inventory there of what consumers actually want to buy and the brands that they want to shop with. So I think that that's something that Dick's is doing very well. We also see the company leaning really well into youth sports. We see a lot of parents who are talking, I had to go run by Dick's to pick up some batting gloves for my son, or, different items like that are now not necessarily a want to have, but a need to have. So I think that that's an area that Dick's has done very well. They touted their Game Changer app that allows people to track kind of youth sports. And so this is a signal to us that they're really leaning in here. And then lastly, Dick's has done a really good job in terms of its digital offerings. And so these are its monthly active app users for Dick's Sporting Goods. And you can see those up about 75% year over year. And one thing that the company has noted is that its omni-channel athletes, it's interesting when you listen to the company talk about its earnings, it often refers to its consumers as its athletes. So love that. And its omni-channel athletes spend more. And so I think that this is an area that Dick's is overperforming, especially a lot of its peers, whether it be Academy Sports, whether it be Hibbets, whether it be Foot Locker, any other kind of sports niche, is that consumers can stop by a physical retail location or they can order something online, and Dick's seems to be doing a really good job of targeting there. So I think that the footwear, the lean into digital, and the lean into youth sports is what's really driving Dick's stock higher of late.
Megan, every season starts at Dick's. Remember that as you become a young parent. It's an expensive hobby, as you know. And when I look at, for them to beat really good comps from a year ago, fourth quarter 22 fiscal, they were up 7.6%. For them to beat and go up another 2.8% in same-store sales, that's good numbers. They're putting up good numbers, and it's all demographics. They're not seeing trade downs. They're still buying the high price. They have the advantage of they have all the shoes there, right? You don't go to Nike.com, you don't go to Hoka, you don't go to On. They have them all right there to choose from. But, Megan, and here's the bad side, this stock has rallied a long way. Their 12-month, 100%. 6 months, 29%. This stock has a lot of this good news valued into it, Megan.
Yeah, I think that whenever we look at our data just at large, we say, okay, Dick's looks really good right now. The, consumers seem to be searching for whether they're looking for store hours, whether they're looking for a location near them, whether they're looking for inventory, what are the hot items trending right now. Those searches are up about 27% year over year. So consumers are definitely interested. But as you mentioned, the stock, I think, is trading near all-time highs. So that's the caveat that investors are facing heading into this report. Our data does look really positive. We do see a reason for this run up in the stock, but I would say that there's a little bit of caution there, a little bit of risk. Other potential red flags in our data, when we look at the Golf Galaxy brand, we don't see that performing quite as well. So I think that, that's definitely not as large of a contributor to the company at large, obviously, but a little bit of a slowdown there. We see a little bit of a slowdown in overall e-commerce mentions when we just look at those web visits up by a point year over year. That's a bit of a slowdown from last quarter. So could be some signs of caution there. But in terms of foot traffic, in terms of searches of consumers who are wanting to go into the store, we see continued strength.
Yeah, comparable sales came in at plus 5.3% last quarter. That gave the stock that big bump up. But it's at or near all-time highs here, Megan, going into this report. And you mentioned on your one chart the competitors. They don't have any competitors now. It seems like, as far as physical stores, Hibbett, and maybe the other one, Academy Sports, I believe, is the other one. Those are small players in this pond. So have they become the default, and that's maybe why you're seeing better foot traffic, is just because, hey, if you want to go to a store and find all these brands, Dick's is the only option in a lot of places.
Yeah, and just to give scale, if you're looking at Dick's Sporting Goods versus an Academy, Dick's has about 3 times the mention volume and web volume that we're measuring. So this is like the massive player in this space. This is the best of breed, but we do see really high levels of sentiment because consumers are saying, this is the store that has the widest assortment of brands and the highest quality brands that I'm searching for. And so the company has done a really good job of improving its shopping experience. We haven't even touched on its House of Sports, which the company noted is actually bringing people back to malls. And so I think that's something noteworthy, that it knows that if it can create a good experience for its consumers and the kids whenever they're going to shop with their parents for their sports, that it can kind of cement itself long term as that go-to destination for any athlete that needs some updated apparel or footwear or things of that nature. So for us heading into this, our score actually is bullish, but we are very cautious because the stock has traded up so much over the last year.
Yeah, that's going to be the concern, that high bar going into the report, where even if they do beat estimates, and they guided higher last quarter for the full fiscal year. So bar's high in this one. All right, great stuff. Great data as always, Megan. Appreciate it.